All right, guys and gals, back in the action once again. It's about that time of day again here, folks. It's Thursday evening. It's May the 16th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find predictable, dependable, reliable, profitable trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to find the best levels, the best setups, the best opportunities that I see setting up for tomorrow. That's Friday, the third Friday of the month's trading session. And tonight we're going to grab oil, we'll grab some S&P, we'll grab some Nasdaq, some gold, and of course we can't forget about that mighty euro. I'm going to jump into oil tonight because oil, like a lot of these markets, made a big run today, but they're right into their objectives, and that means we've got to really be careful to find the right entries and avoid those losses, those common traps waiting for oil tomorrow. Let's grab that Texas tea, let's grab that black gold here, and let's get this party rolling here this evening. Now, of course, oil is a very strong bull market higher, but you'll notice we are right up around two major levels of resistance. One is the top of this trading range expansion, and the other, of course, right, is that two-legged measured move. So bottom line is we know we're bullish, but we have a lot of resistance in our way right now. Now, I know you guys watch this newsletter every evening. What's my favorite entry pattern whenever I have concern about buying into resistance? I've got one pattern I'm watching for here tomorrow, but I have to admit though, I'm also keeping an eye on four different scenarios: up, down, sideways, and a head fake. I'm going to break all of those scenarios down here. We'll also talk about rollover tonight on that oil, because oil has potential to make that next leg higher here, but I've got to be careful so I don't get wrapped into a trap here trying to buy into this high. We're going to grab that oil in a lot more detail here tonight in just a few moments. Over on the S&P here tonight obviously is bullish as well. Bunch of go-getters here this week on the S&P, getting that gap filled about 24 hours earlier, right, than they got last week. Pretty amazing how that happened on a Thursday this week. But the bottom line is, anytime we see a very strong move up, what do we know? We always expect to see that next leg. So we know there's a big bullseye waiting right to get back to retest that high. But much like oil, we have some problems right now, right? I've got some major levels of resistance here overhead. But the big problem is I've got this channel coming down. This is a bull flag. And bull flags always tell me to look for flag setups and flag failures. Flag setups to be a buyer, and don't forget about those highly coveted failed flags that drop back down. We're going to talk a lot about flag patterns tonight for the S&P, so stay tuned on the S&P as well. Nasdaq is also battling with a flag right now. Nasdaq is a little bit more, what's the word here, trappy here right now, because you'll notice the Nasdaq is right up into that gap fill and only a few inches away from that measured move. So just like the S&P, the Nasdaq has some major resistance. We're definitely bullish. I want to be a buyer, but I'll tell you right now, this market right now on the Nasdaq is screaming stop out, picking our pockets, trying to get us to chase after this move. I'm going to give you guys a great plan of attack here for how I can buy this market, and even how I can try to sell off this top here tonight or tomorrow, right, as well. And of course, I'd be lying to you if I said I wasn't thinking this thing had legs to go to another measured move. We know where that next measured leg is going to be, and I'll talk about what it's going to take to get there and my plan to profit from that as it runs higher. So make sure you stay tuned on that Nasdaq. Over on the gold, the yellow metal here tonight, boy, gold very similar in the opposite direction, of course, to the E-minis. Gold, of course, breaking free of its trading range. Apparently, what's good for the E-minis is bad for the yellow metal, right? We know this has a 1, 2, 3-legged move down. They got that measured move. That means, obviously, we are bearish. And I think we talked about this last night, but there is one scenario I always look for whenever I get a first test of a measured move. I want to go up and sell it back down. We'll talk about how to get short up here even in the face of that rising support trend line. And to be very honest with you, I'm going to be keeping my eyes open for a run back up into that trading range tomorrow, because easy come, easy go. What let this market drop like this could easily evaporate, and I want to make sure you guys are ready for what it will take to be a buyer going back up into that trading range. So if you're a trader for the yellow metal, make sure you stick around on that tonight, because I think we might have a chance here to grab this thing going right back up tomorrow if we play our cards right. Over on the euro tonight, euro, as you can see here, is obviously bearish. We've now broken free of that trading range with a 1, 2, 3 breakout. It wasn't easy, it wasn't pretty, but they got that final follow through here today to complete that bearish breakout or bearish reversal, whatever you want to call it. There are really three main components on this euro chart. One is the big round number. That tells me to look for one specific chart pattern tomorrow. Two, of course, is this hidden channel that we have, right? That hidden channel tells me exactly where to look for longs and where to look for short trades, right? Using that hidden channel. The big thing then, though, is, right, is of course the potential now, right, for a trading range down here, because anytime I see a strong move like this in one direction, the following day tends to have potential, right, for a range. So my job really at this point is I'd like to combine that range for a sell off the high of that channel, but I'd also like to see if we can get this thing, if it wants to reverse, again, just like on gold, back up right into that trading range. So obviously we're bearish right now. I want to be a seller, but I'm going to keep my eyes open, and we'll go over some plans tonight for how the market may reverse as well tomorrow. That way you've got all the angles covered here for tomorrow's finally Friday trading session. We got euro, gold, Nasdaq, S&P, and crude oil. Before we jump in though to those charts here tonight though, I just want to make sure that you never miss another great newsletter video. You know, guys, before I publish this video every evening on our YouTube channel, I always make sure to send an email out to everybody on our mailing list. And I want to make sure that you get that email so you know when these videos go live every evening, because they'll get you ready for the following day. Very, very easy to join our mailing list. Just give me your name, your real email address. Yes, real email address. I'm going to use that email to you. And then don't forget, hit that subscribe now button. Now remember, guys, when you subscribe to the list, I'm going to send you two things. One is a verification, and two is a welcome email. So make sure you check your inbox, check your spam folders, check your junk folder. If you're on Gmail, check that little promotions folder, right, where a lot of times those emails will get stuck and hidden in there. So make sure you find that email, because I need you to check that email to verify your inbox and join our mailing list. Next up here, I need your help. I'm always asking for feedback, and tonight is no different. I put a lot of effort into this video every evening to make this the very best place to learn and earn on our blog here at sidewaysmarkets.com. But I'm always trying to get better. How do you use the newsletter? What do you love? What do you hate about it? What's your favorite market? Do you watch the entire video, or do you just skip to the market that you want to watch there for tonight? How could I make this better in your opinion? What's the best part about it? What's the worst part about it? Don't hold anything back. I am always listening, because I'm always trying to make this newsletter better for you. So drop me some comments in the comment section below. Let me know what you love. Let me know what you hate. What's your favorite market? How are you using this? Do you watch this the night before, or do you wait until the following morning and watch it before you trade? Right? I know a lot of you guys like to do that before you trade each morning. I want to hear from you, because what you love, I want to do more of, and what you don't like, right, I want to get rid of that right off this newsletter, so I can always keep getting better. Now, after you give me that feedback in the comment section below, if you love the nightly newsletter, if you tune in every evening, Monday through Thursday, give me a thumbs up on the video tonight. That goes a long way to helping me reach more traders in the YouTube channels that are out there. And don't forget to subscribe to our channel. That way you never miss another great video. And then don't forget, if you have any questions, right, upper right-hand corner, I've got that toll-free phone number, that live support tool in the upper right-hand corner. I realize most websites these days are all automated robots and chat widgets and call centers and all kinds of stuff like that. But I'm old school. Right? Call me old school. I'm a little bit behind the times. I actually answer the phone. Yeah, when it rings, I answer it. I actually answer it. We answer all the questions. And so if you have any questions, right, any questions about brokers, charts, data, free trials, getting access to our trade room, or anything we talk about tonight on this video, don't be afraid to pick up the phone. Call us anywhere in the world. We're always available. And we also have that live support tool in the upper right-hand corner if you need any help, right, off of the telephone there as well. All right, boy, it's great to be here with you guys. Feels great to be alive on a Thursday evening. The rain just stopped here in Los Angeles. We got some beautiful sunshine coming out here for a few hours here today. It has definitely been a rainy spring here so far. But speaking of that, we're almost out of the springtime season. We're almost into Memorial Day weekend. Next weekend is Memorial Day weekend. I can't believe that. Beginning of the summertime season. I think we're going to have a pretty explosive summer personally. I've seen a couple of these real slow spring seasons we've seen right now. A little bit slow right now this spring, you might have noticed. And I've seen a couple of these in my career. And usually when the spring season is slow, that summer really kicks into high gear. So I'm really looking forward to, right, the Memorial Day weekend. Next weekend, of course, a little bit of holiday break next week. And then, of course, back for the full month of June, July, August, into the fall. We are just about ready to go right into that summertime season. Bottom line, though, is that's next week. Let's get ready for tomorrow. Tomorrow is Friday. Anytime I have a Friday session, I always know early in, early out. Friday morning, you better have a good reason to be trading after 11 o'clock Eastern time. The bottom line is on a Friday morning, especially tomorrow, because there's no major news on the schedule tomorrow. As you can see, there's no major news tomorrow. So without any scheduled news tomorrow, we're probably going to continue here. You know, really the big themes right now are the trade talks between the U.S., China, the U.S., and the EU, and of course the oil sanctions with Iran, right? We heard today from Saudi Arabia. They're accusing the Iranians, right, of sabotaging their oil fields. Remember, these sanctions in Iran are probably not going to go easily, and I would imagine a lot of people are going to be there's really some turmoil right now building up. So oil is definitely on our radar here tomorrow. We may see some unscheduled stuff that may pop up tomorrow morning regarding these Iranian oil sanctions. And again, what's happening is it sounds like they are causing a stir, right, in the Middle East right now, most recent being the accusations from Saudi Arabia regarding the sabotage of their oil pipeline. That may be something we have to deal with tomorrow. And obviously, right, the trade tensions right now between the U.S. and China. Just yesterday we heard about auto tariffs between the U.S. and the EU. So there are still some big veins, right, flowing through these markets right now. No scheduled news tomorrow. Early in, early out. You've got to have a good reason to be trading after 11 o'clock Eastern time. And as always, don't forget, we open our trade room every morning, Monday through Friday, 8 o'clock Eastern time. And I want to see you there with me tomorrow. Let's get ready for that prep work tomorrow here, by the way. Let's jump into our charts here. So no major news on the schedule, right? But again, with the, looking at oil tonight, with the oil sanctions with Iran, and of course the trade tensions, there will probably be at some point tomorrow some big headline news report that we need to be aware of. Now, real quick here, talking about rollover on the oil market. We've been talking about this all week this week. Today, of course, is the 16th. Anytime after the 15th of the month, I always start looking at the volume on oil. As I look at the market analyzer tonight here in NinjaTrader, I can easily see right now there is still more volume on that 719 contract. But if you've been tuning in here with me every evening so far, you can easily see that 719 contract is quickly picking up momentum here. We're getting more volume by the day on that 719 contract, and as the 719 contract gets more volume, we of course will then trade that 719 contract. So most important thing right now is, as of tonight, the most amount of volume is in the 619. This is a 619 contract I'm analyzing tonight. We will be trading the 619 contract tomorrow, unless, of course, that 719 contract, right? Unless that 719 contract kicks in with more volume. So, unfortunately, we got to wait a little bit longer here on the oil to get that contract rollover. Just remember, you really can't mess this up, right? If you choose the 619 and really the 719 tomorrow, it's not the end of the world. Just make sure you're trading the market or the contract that has the most amount of volume. So we'll keep that eye out tomorrow. And obviously, I'll be there with my clients tomorrow to make sure, right, everyone has all the information that they need. So rollover is definitely on our radar here tomorrow. We want to be aware of that. Now, what else do we know here? We know right now the market is bullish, right? What else do we know? We know we have 1, 2 legs up into resistance, right? Bull market, but into resistance. What else do we know? What else do we know? Oh, we also know we have this big trading range, right, from earlier on this week. We take the size of that range, copy and paste it up, copy and paste it up. We know this area is major resistance, right? We also know we have a major top from earlier on, not this week, but last week, right? Was that last Friday, right? Monday, Tuesday, Wednesday. Sorry, that's Monday. It's the E-minis that it was last Friday. So you got Monday's high, right? So here we are finishing up the week right back up, right, at the beginning of the week's highs there. So we get a lot of clues on this. We know we're bullish, but we know we've got, 3 different concerns about levels of resistance here. I really don't want to be buying into resistance. So, of course, I've got a real strong bull market. I know that whenever I see a real strong move in one direction, I know we're probably going to see a second leg. I know where that second leg wants to go. It wants to go up to that next measured move. The problem, though, is I don't dare try to buy high right now. The problem is if you buy high, if you buy into resistance, you're not going to get as many traders, right? There'll be fewer people who will be interested in taking that trade. And because there are fewer people, what happens is you get a lower winning percentage, right? If you want to increase the odds of your success, the simplest way for you to increase the odds of your success, increase the winning percentage on your trade, is to always make sure that you have a nice big opening here for a profit target. And there isn't right now. So that's the big problem. The big problem right now that I see is there's no space overhead. And so for me to be able to be confident take this trade long right now, even though we are pulling back, there isn't a lot of incentive here for other people to pile on. Right? So where could I get some incentive to do that? Here's a couple scenarios that I'm waiting for. The first thing that comes to mind is any time I see a test of a moving average, we almost always see a deep pullback that's off profit taking and then a second leg to go lower, right? We almost always see these profit taking pullback that confuse the sellers into thinking this is a bear market, right? Sellers try to sell into it. And then once we see those sellers take the bait, now we know where their stops are and we can buy right into those stops. Okay, that's the typical pattern that I look for whenever we have a measured move. But you'll notice that doesn't solve the problem. That doesn't solve this problem. What's the problem? The problem is I don't have enough open space. So what's a good setup that I could use to avoid that problem? Here are 2 things I'm looking for here. 1, the most aggressive, right? Let's play the most aggressive one first. The most aggressive pattern first is going to be what we call a nested 2-try failure. In other words, strong move down. I'm waiting for these sellers to try once. Sellers try twice. And here's the kicker, because we have that level of resistance overhead and I need to get as much open space as I can, I'm looking for that nested 2-try with a trap. I'm going to talk more about these patterns here as we go, but the basic idea of this is you want to let those sellers try once, let them try once to sell off it, let them try twice, right? So they bring it down, right? See them look for once, look for twice. The real key here is I'm looking for that trap, right? That trap is what I need. I need some sort of trap to allow me to avoid, buying into that level of resistance. That's the most aggressive one, and that will take some patience. The hardest part about this pattern is that right as it starts going higher, right here, right as that second try starts going higher, everybody likes to jump in right there, and it fools a lot of people. What you don't want to do, though, is you don't want to buy high like that. Wait to buy it as it comes back. I made this mistake all the time when I was a rookie. I would buy that break higher. My stop, of course, would be right below that swing, right? I get stopped out, throw my keyboard across the office and then watch it go without me, right? Mop up my tears off the floor at the end of the session. The bottom line is that's an easy pattern to really tick all the boxes. We're buying at support. We're buying with a good space to trade for a target, which will increase the odds of our success. You're also buying into the seller's failure. Okay, keep your eye on that for tomorrow. Next one is a second leg down. Now, again, I mentioned earlier, I like to buy into those stop losses. This time, though, I'm going to draw a trend line down and try to use that trend line as my key level of support. What do we call these? We call these two-legged pullback patterns. Okay, so again, I would normally look for that failure, right? Look for the sellers to sell this thing and then buy right into those stop losses. But again, that doesn't solve that problem. So instead what I'll do is I'll wait for those sellers to come in, draw my trend line down off the wick to the body, right? Wick to body, right? Imagine if there's a candlestick like that, right? So you draw it off the body of that candle right there, right? Off the body of that. We'll talk more about that in our membership classes. But the bottom line though is now that gives me sellers trying to sell. I don't want to buy up here, right? I want to let it go up. And you'll be surprised, these types of setups, they look so convincing when they run higher, but usually they'll trap and then right back and then back up from there. So watch that last little dip, grab that trend line and up from there. Now, one more scenario. What if we don't get either one of those? What if we bounce right back up? If we bounce back up, then what do? Do we bounce off the highs? If that's the case, if we double top off of that high, this becomes a trading range. And if we do get that range, it becomes pretty easy at that point. If we do get a bounce off that high, draw that as the range top, that as the range bottom, and then repeat after me, 2 try failure. 1 try, 2 try, back up in. Let the bears try once, let them try twice. They will oftentimes look like these types of patterns, right? Well, they'll go 1, they'll go 2, and then we'll buy up in. That same basic idea, this time at the low of that trading range. Okay, makes sense? So if it does, again, if it double tops off that high and rolls over, that's your cue now. It's a range-bound market. We're bullish, and I'm going to buy at the low of that range using that 2 try failure pattern going back into the range. Now, what if we go higher here? Right? What if we go higher? What if we jump as we go higher here? There are 2 basic patterns I'm looking for. We know where they're hunting for, right? We know where they're trying to go. And this is what you'd be looking for tomorrow if we hear about, more shenanigans, right, in the Persian Gulf, more shenanigans in the Mediterranean. We've heard about this pipeline, drone strike in Saudi Arabia. We heard about the cargo ship being hijacked, right, outside of Yemen. We've heard a lot about these things happening the last couple of days. That could easily spark a run higher here. Here are 2 patterns I always wait for. One is called the 2 try breakout, strong move up, 1, 2, and buying. Notice how I draw this higher highs there. Let the bears try once, let them try twice, and you're literally buying right into those stop losses. Okay, you don't want to buy the first one because a lot of times that second one will come in and run it lower there. Wait for that second one and buy into that second one, or it's a 1, 2, 3, right? So if we don't get the big blast higher, right? If it blasts higher, it's the 1, it's the 2, and then up from there. It kind of looks like this one right here, right? Blast higher, 1, 2, right? That higher high right there, and you're buying into it from there. That's a trick, right? So strong move up, 1, 2, buying again. Make sure you get those higher highs, or it's a 1, 2, 3. That will be the proof that we need, that third leg going higher. Then we mark up that high. We call these a 1, 2, 3 breakout, mark up that high, and of course up off that low, and we are buying off the low of that channel. Makes sense? Okay, now, how do we go bearish now? Okay, we talked a lot about the bull side right now, so now we know a couple patterns going higher here. We've all exhausted now, right, our buy setups here. How do we turn bearish? A bear market should be pretty easy. All we need is a 1, 2, 3 reversal. 1 is a strong move down, 2 is a pullback that touches the moving average, and 3 is a run off of it. Okay? Now, I don't think that just having another strong leg will be enough, because I do think you're going to see a lot of traders trying to use that as a two-legged pullback. So for me, I want to see it 1, 2, again, pull back to the moving average, and 3, strong move off. Then mark up that low, and then up off that highest point. That's where you find that hidden channel, and we're looking to sell right off of that hidden channel. Where's my target on that? Back to 61.86. What is 61.86? Well, if you're asking that question, you probably don't watch my newsletter every evening, right? We've been talking about 86 for weeks now. That was 2 Fridays ago's closing price. That was the gap, right, from 2 weeks ago that continues to be a magnet. So watch that 86 if you are a seller, and watch this trap, right? This oil is trying to lead you right into a trap here right now. So be very careful. Speaking of traps, let's get the S&P going here. This S&P, very similar to oil in the sense that we've got a strong bull move up. What do we know right now? We know we're bullish, right? We also know we have 1 leg, 2 leg, and we're pretty much sitting right underneath that measured move. What else do we know right now? We also know we're retesting. This is last week's, right? That's last Friday's high. Like I said earlier, right? Bunch of go-getters here on the S&P this week. It took them a full week to fill that gap, right? Last time, this time, it took them less than a week. So quite impressive, right, on that move higher here. We also know, right, the gap fill, last Friday's high. Right, what else do we know right now? We also know that as we're coming back, we've got this channel forming here, right? That's something we can easily see. Draw the trend lines off the low, match it up there off the high. What is that? That's a flag pattern, right? So we do know we have that flag pattern setting up, and of course we also have high to high, off to that low, and you can see we're kind of grinding now, right, off of that low. So we're definitely bullish. Obviously, the trend is bullish right now, but I got a couple concerns. 1 is obviously all this resistance. 2 is going to be this channel coming down, right? But I'll tell you my big concern. My big concern is let's dig in a little bit closer here on this, because you've really got to get a little bit closer view on this. My biggest concern is momentum right now. Look at how momentum jumps off that moving average, right? Now, what do we typically see when we see a reversal like that? I'm not going to go calling this a bear market yet, because it's a little bit early, I think, to think this is going to be a bear market right now, especially since we're touching the low of that channel right now. But I do believe though that this market has given us, it's giving the sellers a little bit of courage here right now. And ultimately, what you got to be watching for is this area right above this 81 3/4 area right here. So if you pop that in here real quick, right, that 81 3/4, this area right there is going to be an area where, let's put it this way, if I was going to try to sell, for a sell right now, I would look for that same thing we talked about, not last night, but the night before, right, with that trap and go. So if you want to try to sell this market right now, it's setting up for a beautiful failed flag. I just don't trust the sell side yet. It's just way too bullish, even though we have that shift, right? We had this setup happen earlier on this week and nailed that short, right, on I believe it was Monday night into Tuesday's, right, trading sessions. Go back and check the numbers on that. But that's going to be, right, that's going to be your trap high for that sell. That's not what I'm looking for. What I'm looking for here right now is I'm looking for those sellers to try it and ultimately fail, basically is what I'm looking for right now. I know we're bullish here. I don't want to buy into resistance. So what's the best pattern to look for when you don't want to buy high into resistance? Trap patterns. And if I have a bear momentum, but I want to buy, what's the best setup for that? The 2-try failure, right? The nested failure. So now I want to go higher here, but I'm worried I've got sellers waiting in the brush, if you will, right? Up above that 81 3/4, right? So I've got that move lower here. I'm expecting sellers are going to be waiting there to try to sell it. So what I'm looking for right now is I'm going to look for those bears now, right? They've tried once off the moving average. I want to see us go up, go into the sell zone, and this is where the magic happens. Now we look for those bears to try to sell it. I look for that trap. Again, it's got to be a trap on this. It doesn't always need to be a trap, but this particular nested two-try failure pattern needs to be a trap low because, again, I've got too much resistance overhead, and much like we talked about on oil, I don't want to buy because if you buy up here, right, if you're buying up here, remember, you can't attract enough people into that trade, and the easiest way to increase your winning percentages is to make sure you always have, right, that big enough reward to attract all the professionals, people who've been around the business for a while, and they're not going to make that rookie mistake by chasing it after it as it goes higher. So if I can get that one try, again, think about it, right? The bears try once, right? The bears try twice. One of them is a trap. That's what I need now to feel confident to be a buyer right now, okay? Now, from there, what if it goes running back higher, right? What if this runs back up? It's the same basic idea as we talked about on oil, right? If it runs back up here, I don't want anything to do with buying up these highs because you can't trust it, right? We may see this thing make a run and then pull right back, right? Stop you out. This may happen, right? We may run up, stop you out just to have sellers try to sell it short off that moving average so we can then be a buyer. Same idea. Right? So the bottom line is do not chase it as it runs higher because it will probably kick back, right? And will stop you out just in time, right, to stop you out before it runs back up to retest the high. Okay, so a couple scenarios there. One is going to be that two-try nested with a trap. Again, if you want to be a seller, just dump that sucker right below that moving average, right? Once you get that nice strong signal. Not exactly my cup of tea for tomorrow, at least not right now, right? But that, of course, is your prerogative. If you want to try to sell this thing, that would be the pattern I would look for to sell that trap high, right? Or it's a two-try trap go up, or if it runs higher here, just wait for the kickback, right? It probably will. If it kicks back, what will happen is the moving average will come over, let those bears try to sell off of it and just buy into their stops. Right? That's the best way to do it because what will happen is the bears will see that and they'll think this is a reversal, but in reality, all it is, it's a range, right? And you're buying the low of that range, okay? Which brings me now, right, to my next point, which is if we go up and bounce off of it, it will become a range probably like that. You can see those little guys over there, right? Probably a range. If we go up and bounce off of it, what do? One try, two try, back up. As you can see, the one big theme on this is stay away from those highs, right? Stay away from those highs. It's very difficult to make money in the long term if you get in the habit of buying high. So those are three different things to watch for here if we can't crack through, right, the top of this range. Now, what if we can? Right? What if we can crack to the top of this range? We have potential here for a very big, right, measured move going higher here. There is a lot of potential right now for a very large move up. You get the big round number at 2,900. But the bottom line, though, is what if we get up and bounce off? That's your range, 1, 2, and buy back up, right? What if we break through it? If we run through that sucker, right? Remember, big break up, 1, 2, you're buying into those stops, right? 1, 2, you're buying into those stops. Or maybe it's not as aggressive, but gets the job done. Maybe it goes 1, 2, 3. As long as we get that 1, 2, 3 breakout, mark up that high, and then down off that low, right? Draw up off that low. Keep in mind, a lot of times that low will not connect to that channel, right? It's off of this low back there. Now we know where the sweet spot is, and now we're looking to buy that pullback off the sweet spot. All right, guys? So that's called a hidden channel with a 1, 2, 3 breakout. And again, we're looking for that next measured move, right, will be our big target for tomorrow. Last but not least, how does this market turn bearish? We're ripe for it. All this thing needs is one more strong leg down. If we get one more strong leg down for these bears, this is a bear market. And at that point, I'll mark up these lows. I've got to think buyers will be buying off of this, right? Because of the location of that pullback, I'm going to mark up those lows up to those highs. And ultimately, what I'm looking for here is I'm looking for a sell off the top of that channel. Now, think about it this way, right? If you were to zoom in on that area there, there's your, right, top of your range. We go up, moving average comes over. Buyers will try to buy the pullback, and I'm going to look to sell right into those failures, right? So imagine that's what we're looking for, right? Imagine that is kind of zoomed in on that area right there, right? It's a buyer failure and then selling off the top, right, of that channel. Now, right now, I'm just drawing on the screen right now, and some of these patterns might be completely new to you, right? What is a failure? What is a nested? What is a 1, 2, 3 breakout, right? What does reversal look like? I want to give you a whole lot more information. In fact, I want to give you hundreds of examples of real patterns. That way you can see what real setups look like. Because again, tonight, all I'm doing is just simply giving you my opinion on different scenarios I'm looking for tomorrow's trading session. But if you want to learn all my favorite patterns, see hundreds of examples of those patterns, I'll even toss in, right, an overview of our 3-step trading strategy, the same strategy we trade in our trade room every morning. Grab that free course. It's linked up in the upper right-hand corner. I'll also put a big red button right below the video tonight on our trading blog. Don't worry, it'll pause the video. Just grab that link, get registered. I'll be here when you come back to the video here tonight, but get registered for that free trading course. And don't forget, when you register for the course, check your inbox, check your spam folder, check your junk or promotions folder to make sure you whitelist, right, our website so you always get those emails, right? Just like our mailing list, if you register for the free course, I'm going to send you an email. You've got to verify your inbox. So check your inbox, check your spam and your junk folders, and whitelist our email. That way there's no problems, right, in the future. Looking good. Now we got the S&P all ready to go. The biggest problem right now is the bearishness on the S&P combined with the lack of open space. Right? That's why I'm saying you got to look for that trap and you got to respect these sellers who will likely be coming in right above that 28.81 3/4. Let's keep this party rolling right now. Over to the Nasdaq. Nasdaq is, I'll tell you right now, Nasdaq looks like it wants to pick my pocket tomorrow morning. It does. It's got that grin on its face right now saying, I'm going to take your money, honey. Right? You can see it. Very shallow pullback. It's very much still a bull market. We don't have anything near momentum we saw on the S&P. This market is very much a bull market right now without any real sign of sellers. What do we know right now? We know we're bullish. Right? We know we're bullish. We also know we've got one leg, two leg, and we got that measured move. Right? What else do we know? We know we filled that gap. Right? That gap from last Friday, and we got what? We got Friday's high. So we've ticked all the boxes, right? The Nasdaq has ticked all those boxes that we were talking about earlier, right, in the week this week. One thing we also know is mark up these lows, mark up that high. This is a flag pattern. Right? This is a flag pattern. Flag patterns are tricky because you got to get above them and use them. But here's the problem. The problem is there's no space, right? There's very little space up here. And just like we talked about on the S&P and oil, really, right? When there isn't a lot of open space, I have a hard time getting other traders excited. And again, if you want to increase the odds of your success, if you want an easy, increase in profitability, increase in your winning ratios, if you want to get your odds of success higher, make sure you've always got enough space for a nice big target. So that's the problem right now, right? The problem right now is we don't have a lot of open space. So as far as I'm concerned, my main focus is on traps right now. That's my main focus right now, is representing some sort of trap. If we can get through this measured move, we get a beautiful big target waiting overhead. That might be a little bit too big of a pill to swallow for tomorrow, considering how far the market went today. But hey, I always try to leave my options open just in case we get another round, right, of buy pressure. So what's the best way to trade this right now? The easiest way to do this is going to be to look for that trap. The hard part about this is I've got to get it above this trend line because this is a flag pattern. So imagine now for a moment, right, we go up, we pull back. This would normally be my setup for a flag, right? Normal setup for a flag is going to be we run up, we run into that flag. A normal flag pattern is going to be a couple pullbacks, up and over and go, right? That'll be your typical kind of breakout pullback of a flag. And typically what happens is if the market closes back inside the flag, then that's usually a good sign that we are pretty much done, right? We call those failed flags. So as you can see right now, the hard part is I can't alleviate the problem of buying high just by buying that pullback there. It's still not a great spot because we're right inside that no trade zone. So what's the best pattern to avoid buying high? A trap pattern for sure, right? I want to go up. I want to see him try once. I want to see him try twice, but really just because I want some sort of structure that I can use to be a buyer off that trap low. That, in my opinion, is the most important thing here if the market goes higher, is to get those bears to try once, try twice, and as I mentioned earlier, be very careful. Don't chase after that second attempt. That's what usually happens, right? It'll make you think you've missed it. It'll stop you out just in time for professionals, right, to grab it as it goes back up. That's the most aggressive way to trade it right now. Now, what if we just run back up here? If we run up, then do we break through or do we pull back? If we run up and pull back, now this is going to be some sort of trading range. We don't quite have enough information yet, but I would guess that range will probably be somewhere like that. It looks like you got some tops right there that are hitting. So if we go up and right back down in, I'm going to look for a range on this. And once I see a range, that honestly would make our job a whole lot easier. I wouldn't mind this at all, actually, if it goes into a range in here. If this thing decides it wants to go range bound on us, right, and chop sideways here, that will honestly make our job easier because now that will get rid of the flag pattern and now it's going to wait for the one, right, the two, let the bears try once, let the bears try twice, and then we can buy right into those stops. Now we've got plenty of space. Now we can ride this momentum higher by simply buying right into the stop losses of those counter trend sellers. Okay, so if we do end up going sideways on that, wait for that one, that two. We call these two-try failure patterns. Good example of one back there, right? They go down, that's one. They try to sell off the moving average, that's two. We know where their stops are. We can buy into those stops and then look for the pullback, right? That's a failure into a pullback combination. So as we go sideways here, right, if we do end up getting stuck inside of a range here, keep your eyes on the one, right, the two, and then again, we know where stops are, and we can buy now going right back right into that trading range, a two-try, right, failure pattern. Now, how do we turn bearish? How do we turn bearish right now? We've got to get that 1, 2, 3 reversal, right? Strong move down, pull back, that touches the moving average. Always very important. Make sure it tests that moving average. Once we get the third move, right, that big strong move off the moving average, now I can mark up my low. I can mark up that low, right? And I can now look for my sell off that sweet spot. And again, if you kind of imagine, right, that channel in there, we go up, the buyers try to buy the pullback off the moving average, and we're selling right into those stop losses, right? We're selling into those stop losses we're thinking about right there. And again, I'm just simply illustrating what I'll be looking for. I have hundreds of examples of these real patterns, right, directly from the trading stuff we do every day in our trade room. Grab that link in the upper right-hand corner, right, or grab that free course. below the video. And again, don't forget, check your inbox, check your spam folders, right? Your promotions folder to make sure you find that email to verify we have the right address. Now, what if the market goes higher? If the market goes higher, right, do we blast higher and the 1, the 2? Remember, it's a higher high there and you're buying into those stops, right? You're buying with that signal candle into those stops. Or is it a 1, 2, 3 breakout, 1 strong move up, 2 pull back to the moving average, 3 jump off the moving average? Because remember, this could easily break higher here and then come crashing back down again. It's not a guarantee to go through it just because it's a strong move. Once we get that high though, once we get that 1, 2, 3 breakout, mark up that high, mark up that one. And again, remember, it may not touch that pullback. It's anchored off that major low because that's where the secret stuff is, right? That's where the good stuff is on that pullback, right? That's where those pullbacks always come from, right? Just like I'm marking this channel, right? See, this channel's drawn. 1, 2, 3. What do, right? I mark up these highs. I bring it down to that low. I mean, you can see an example right here. I mean, it's about as good as that gets, right? That's about as good as it gets right there. So now we know what we're looking for here to the buy side. We know the sell side. We know what a reversal looks like. We know what a breakout looks like, right? And don't forget, guys, we do this together with all of our clients in our trade room, right? Every morning at 8 o'clock Eastern time over on the gold. Gold could be a tricky one here tomorrow, right? What do we know right now? We know that gold began this week instead of a trading range, okay? We know that most of the time, right, what begins the week in a range oftentimes will end the week in a range. Now, that's like a gap fill, right? You know, most gaps get filled, but we don't know when they'll get filled. So don't go holding your breath, right, that we're going to get some rally tomorrow morning. Because right now, what else do we know? We also know we have a beautiful 1, 2, 3 breakout, right? A gorgeous breakout for those gold bears. And it makes sense, right? You had that big run up on the E-minis. It makes sense the E-minis would produce the negative effect, right, on the shelter market, the yellow metal, the gold futures. So we know we're bearish. We know we have a 1, 2, 3 reversal. We know we're bearish. And we know we're right, literally to the tick, right, on that measured move. Now, we also know that whenever I get a measured move, we almost always go up and right back down again. So we're looking pretty good here right now. Strong move down to get that second leg going lower, right? Anytime we see a strong move in one direction, we're probably going to get that second leg. What else do we know? We know that we have a rising support trend line coming in. Bring those together, and that will be what? A flag pattern. Now, we talked about a flag pattern to the upside for the Nasdaq, right? This flag, of course, is a bear flag, and I'm going to use that bear flag to sell the underbelly of that, right, of that flag, right? So that's, of course, same idea as the Nasdaq. The Nasdaq wasn't exactly setting up in the right location because it was difficult to buy high on that one. This gold looks a whole lot better, to be honest with you, than that Nasdaq does. What else do we know here? We know we can connect these lows up to these highs and create a hidden channel, right? Very much a hidden channel. And look where that hidden channel puts us. It puts us right at that last reversal line. Strong move down, right? Off that move lower. That is a major level of resistance. So really at this point, if it wasn't for this rising support trend line, this would be a pretty easy game, right? We'd want to go up, get the buyers to, right? Get the buyers, try to buy the pullback and sell, right, into their failure. That would normally be my guidance. That would normally be my strategy, right, for tomorrow, right? Let the market go up at the top of that channel, right, into resistance. Let those buyers now try to buy the pullback off of it, right? If they're successful, it becomes a 1, 2, 3 reversal. If they're not successful, then obviously we're selling into their stop losses, right? As we go back down, you can sell into those stops. You can grab that pullback, right, on the way over as well, right? A failure pattern into a pullback pattern, right, as we make that move back down to retest the low. The problem I have right now is, again, is this rising support trend line. So if I have that rising support trend line in my way right now, let's see if I can zoom in a little bit more. Grab that trend line up. If we have that trend line, let's do this. Let's make this color here. Good. And then I've got my chop, 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 chop. Ideally, I want to find a way in up in this area, right around there, right up on the high of that channel. So imagine now, right, we go up, pull back, and go. What I really want to do is combine the high of that channel with the underbelly, right, with the underbelly of this flag pattern. Now, I'll be very honest, right? Sometimes we don't get that big of a pullback. So if we don't get that pullback, here's the next best thing. If it runs down, look for a trap. Traps will also work. Remember, traps are the next best thing. Again, because you don't want to sell high, right? If it just runs lower, your next best option will be a trap high. Because remember, what's the best pattern to avoid selling low? Right? Remember, again, if you want to get a better winning percentage, you have to make sure you're always selling high or buying low, and doing so that there's enough room for everybody to make a profit. Right? If you're the only person that sees the pattern, or if you're the only person willing to take that much risk for such little reward, you're not going to get a lot of other people interested, and of course, it's going to kill your winning percentages. Right? Trading is a game that we do by ourselves, but we rely on everybody else. Think about that. Trading is a game that we do by ourselves, right? It's a game of pattern recognition and the law of large numbers, right? And statistical probability. It's pattern recognition and probabilities. It's a game we trade on ourselves, right? But we have to make sure that whenever we do trade, everybody else will be incentivized to trade as well. So 2 setups I'm looking for right now on the gold. One, of course, is the down, don't chase it, up and sell off the underbelly of that channel. Again, up or on top of that hidden channel. Or if we do make a run lower, you're looking for some sort of trap high up here, right? Think about the buyers buying once, buyers buying twice, and selling right into those stop losses, selling right above that high. And again, that trap pattern is ideal whenever you're trying to sell, but you're worried about selling into resistance. Now, I know what you're thinking, right? How does this thing turn bullish? Pretty easy, actually, right? Pretty easy. If we make a run lower and come up, and we see this thing close above that trend line, yeah, you can pretty much put a fork in that one. This one's done to the downside. That'd be a failed flag pattern. If we get that, what oftentimes happens now is you get either the pop, let's do this, right? We go up and pop either the 1, the 2, and the go, right? Same basic idea. If it really pops going higher, right? If it really pops going higher, wait for the bears to try once. Again, higher high, try twice, and then we're buying into those stop losses. Okay, that is obviously the most aggressive. What hopefully we'll get one of these, right? We go up, right? It's a 1, 2, 3 breakout. At this point now, or reversal, I should say, mark up that one, then again, off that anchor, right? Sometimes these will not touch. It's okay if they don't touch, right? Now you know where your sweet spot is, and we're buying off that sweet spot. And again, that pattern would be a pullback, moving average comes over, right? Your low of that channel's right here, right? Bears try to sell it, and we're literally buying into that failure, right? It's a failure pattern. It's a failure into a pullback pattern if you were to zoom in on that area right there. All right, guys? So a lot of great opportunities here if we go higher, right? I hope we do go higher, to be honest with you, because I'd love to be able to ride this thing right back up into that range. That's the target for those buyers tomorrow. Where is the target for the sellers? Very good question. If we zoom out on this, right, the last big low that we saw right here, 1278.2, right, 1280 area. So here's the deal, guys. If this thing runs lower here tomorrow, right, again, this is a little bit repeating myself. Same idea we had right, on the previous charts, but different direction, right? If we end up back down to that low and we bounce off that low, this becomes a range, right? Then it's 1, it's 2, buyers try twice, and we're selling off that 2-try failure pattern. Again, I've got lots of examples of that pattern in range-bound markets inside that free course that I mentioned earlier. Or do we roll over and run, right? Now, if we run to the downside, we've got to worry about this area down here. Okay, now why is that important? Because if we run, now you've got to get that 1 try for the buyers, 2 try for the buyers. And remember, when you're concerned about buying high or selling low, what's the pattern? Trap, right? It's very different than just selling the breakdown. Breakdown lower, 1 try for the buyers, right? 2 try for the buyers. Get a lower low on it, right? Because buyers want to buy low, just like that pop higher, right? Pop higher, bears try once, higher high, bears try twice and go. It's the exact opposite thing here, right? Strong move down, buyers try once, buyers try twice. In this example though, because we don't have a lot of open space down here, you want that trap pattern as we go. All right, so watch out for that trap if we do make a run for it aggressively to the downside. Looking great on that yellow metal. Last but not least here tonight, and wrapping up for the week here. Remember, we don't do the newsletter on Friday evenings, right? We do a full recap on Monday morning inside of our trade room. A lot of people always ask me that. Why don't we do something on Friday evening? Well, I don't think you would want to do this on a Friday evening either. So we come back on Monday morning. We do the update on Monday morning before we start in our trade room the following week. So no newsletter on Friday nights, right? The following Monday, though, we'll be bright and early in the trade room, and we'll do it together in the trade room. What do we know about the euro right now? Euro has a not pretty, but 1, 2, 3 reversal. Right? That, of course, now I mark up that low. In this example, the midline fits nicely right there. There's my channel. Okay, we have to assume that's our channel right now, and that channel in a bear market, I want to sell right off of that channel high. Okay, to do that, we're going to probably have to use a move up, a buyer failure, right? Buyer failure into seller pullback, and down from there. This is the basic pattern I'm looking for tomorrow, right? We up at the high of that channel, inside the battle zone. Let those buyers try to buy that pullback, right? Let the buyers try to take this thing higher off that pullback. We'll be selling there right into those stops. And then again, don't chase after it. Wait for that pullback, right? And jump in on the pullback. Always making sure we don't sell low, right? Making sure we sell high. That is the kind of ideal scenario there for the euro tomorrow. What I'm expecting tomorrow, though, is that strong move down that we saw turning sideways down here. Okay, so just be aware of that, right? We also know, obviously, we have 1 and 2 for that measured move. But let's say, for example, though, that we end up trading sideways down here, right? We got that big move down, double bottoms. We're just chopping around lower here. If we do get that sideways range, if we do see double bottoms, moving average flattens out, not a lot of personality, then we use the 2-try failure. And the ideal scenario is to use that in combination with, right, the high of that channel, right? So we go up 1, right, 2, trying to sell off that high. Let the buyers try once, right? Those are breakout buyers. You don't want to sell the first attempt because oftentimes the pullback will happen, right? Buyers will buy the pullback. A lot of traders these days, they won't buy the breakout, they wait to buy the pullback. They're both not very reliable. What's a lot more reliable is waiting for the pullback to fail. Once we see 1 and 2, then we're selling right into those stop losses back down to retest the low of that trading range. Okay. Also keep an eye too if we do get a two-legged pullback. Two-legged pullbacks are quite common when we have a large trading range, right, or a large channel, right? That large channel, okay, keep an eye out for a 1, 2, 3 or a two-legged pullback. Draw that trend line across. And then now I'm still looking for the same basic idea here, but I'm trying to get below it, up, and use that trend line now, right, as my key level of resistance. Okay, so if we do see this thing If it does, one, pull back, and two, now just make sure you draw that trend line up. And then again, we want to get below it, use it, and go. If we don't get that pullback, if this thing just sinks down here, remember where support is, what's the best pattern? 1, 2, trap, and go, right? That's the better pattern if it doesn't want to pull back. Oftentimes what will happen is it'll pull back right up and you'll get that nice signal off that trend line. If it doesn't though, if it just runs lower, right? Just runs lower there, 1, 2, trap, and down from there, right? So not difficult, but not totally easy either. And you know, that really is the name of the game, right? The strategy that we use is really simple. The patterns are really simple. But I'll tell you right now, you know what's not simple sometimes is these markets, right? Sometimes these markets aren't very easy. And I'll tell you right now, it really helps to be with somebody that you trust to kind of guide you along, right, every step of the way, because the strategy is simple. I can easily teach you our 3-step strategy, teach you all the patterns. Again, that free course I mentioned earlier will teach you all my favorite patterns, pullbacks, failures, strength, traps. You'll learn all of that as part of our free trial right to the right, or the left of my ugly mug there. Grab that free trial there, and that free trial will give you access to our trade room on a free pass. It'll give you access to our free trading course so you can learn the trading strategy. But let's face it though, right? There are lots of great strategies out there. What's not so easy are the markets. Sometimes the markets move really fast and I've got to make split-second decisions. Sometimes the opposite happens and the markets are very slow and I have to be patient and disciplined to wait for that setup. That's on my terms, right? So the markets can be tricky right now, and the best way to get through it for a new trader is to join me every morning in our trade room. Let me show you the right way to do this. That way you can look over my shoulder as if you're right here in the office here in Los Angeles, and we can do it together every morning at 8 o'clock Eastern time. I hope I see you guys there next time. Don't forget, tomorrow, no newsletter tomorrow night. If I don't see you guys tomorrow in the trade room, have a great weekend. Come back and see us again on Monday. Join the free trial. Learn more about our advanced membership, right? That includes everything you need to be successful. You can learn more on the website or pick up the phone and call me anytime here in Los Angeles. I'm always here to help. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.